What does $36 trillion 0 cents in debt look like? It's not a number anymore, it's a crack running through the spine of the global economy. Every second, America adds over $100,000 0 cents in new debt. Not for bridges or hospitals, but just to pay interest. In 2025, U.S. interest payments will surpass military spending for the first time. Let that sink in. The world's richest nation is now borrowing just to stay afloat. Markets are watching, rivals are moving, and investors, they're asking one terrifying question. What happens when the world's reserve currency starts bleeding trust? Because this isn't just an economic headline. It's the beginning of a crisis with no exit plan. The U.S. didn't hit $36 trillion 0 cents overnight. It was a slow-motion spiral, driven by wars, bailouts, stimulus, and silence. Since 2000, the debt has quadrupled. Not because of growth, but because the system rewards delay, not discipline. Every administration raised the ceiling, kicked the can, and blamed the last guy, until there was no road left. In 2025, the U.S. is spending over $1 trillion 0 cents a year just on interest. That's more than education, healthcare, and infrastructure combined. It's not paying for tomorrow, it's paying for yesterday. What caused it? COVID bailouts triggered a flood, trillions printed. Defense budgets never shrank. Tax cuts, unfunded programs, and now record entitlement costs. Social Security and Medicare are devouring the federal budget as boomers retire in record numbers. Meanwhile, Washington fights over pennies while borrowing billions every week. But the real trap? Rising interest rates. In 2021, rates were near zero. Now they're above 5%. That means new debt is exponentially more expensive. Every time the U.S. rolls over old bonds, it pays more just to tread water. And foreign lenders are starting to notice. Japan and China, once the largest buyers of U.S. treasuries, are quietly pulling back. The Federal Reserve is being forced to absorb more and more of its own debt, like buying IOUs from itself. That's not stability, that's desperation. And don't let the GDP ratio trick you. Even if debt is only 120% of GDP, the pace matters, because it's growing faster than the economy that's supposed to support it. This isn't just bad math. It's a time bomb with no safe defuse. So ask yourself, if the most powerful country in history can't balance its books, what happens when the bill comes due? America's debt isn't just America's problem. When the U.S. sneezes, global markets catch the flu. And at $36 trillion 0 cents, this isn't a sneeze, it's a tremor. The U.S. dollar backs 60% of global reserves. U.S. treasuries are treated like gold. But what happens when the world starts losing faith in both? In 2025, Japan reduced its treasury holdings by $89 billion 0 cents. China followed suit, not out of anger, but strategy. The U.S., they're diversifying into gold, into euros, into yuan-denominated bonds, because holding U.S. debt now feels like betting on a sinking ship. Bond yields are rising, not from strength, but fear. Investors demand higher returns to hold riskier U.S. paper. And that ripple is hitting Europe, Asia, Africa, everywhere the dollar once ruled uncontested. Currencies are sliding. Capital is fleeing emerging markets. And global borrowing costs are climbing, all tied to one thing: U.S. instability. In 2023, the world trusted the dollar as a safe haven. In 2025, it's a question mark. A $36 trillion 0 cents question mark. IMF officials warn that even a mild default or delay in U.S. payments could trigger systemic disruption. Think 2008. But this time, the contagion starts at the core. And it's not just economics. It's political. When your reserve currency feels fragile, alliances wobble, trade shifts, and confidence collapses. This isn't just a fiscal crisis. It's a global reckoning, and it's already begun. Every crisis has casualties, but it also has survivors. Sometimes even profiteers. So who's losing as America sinks into $36 trillion 0 cents in debt? Start with the obvious, the American middle class. 401k tied to treasury bonds are losing value. Retirement plans are shrinking as inflation eats savings and bonds fall behind. The dollar buys less, while the interest on national debt eats up public investment. Schools delay repairs, roads crumble, and small towns wait for funding that never comes. For everyday Americans, the future isn't tight, it's evaporating. Next, small businesses. As the U.S. borrows more, interest rates climb. That means higher loan costs, tighter credit, and fewer chances to grow. Meanwhile, large corporations hoard cash, buy back stocks, and pass on inflation through prices. Now look globally. Emerging nations holding dollar reserves? They're trapped. As U.S. instability grows, their currencies weaken, their imports rise in cost, and their citizens pay the price. Food, fuel, medicine, all climbing. But not everyone's losing. Hedge funds and currency traders? They're cashing in. As bond prices swing and dollar volatility spikes, speculators are making billions betting on collapse. Foreign rivals like China and Russia are watching and moving. China's increased its gold reserves by 12% this year. It's pushing yuan-based trade deals with Africa and Southeast Asia. Russia's selling oil in rubles and yuan, not dollars. They're not just hedging, they're replacing. Even big tech is pivoting. Apple, Amazon, Tesla, they're stockpiling foreign earnings, avoiding U.S. taxes, and diversifying globally. They're not defending the dollar. They're detaching from it. And maybe that's the lesson. The deeper the debt, the clearer the divide. Between those who can ride the storm and those who are drowning in it. Because in a $36 trillion 0 cents crisis, the winners are already leaving the table. And the losers are still paying the check. For decades, U.S. debt wasn't just tolerated, it was trusted. Because America was the center of gravity, the banker, the builder, the backstop. But in 2025, that foundation is cracking. The $36 trillion 0 cents debt isn't just a domestic liability. It's a global test of faith, and the question being asked everywhere from Frankfurt to Nairobi is simple. Can the U.S. still lead with debt this deep? De-dollarization is no longer theory, it's strategy. China and Saudi Arabia are settling oil in yuan. BRICS nations are launching cross-border payment platforms. India signing deals in rupees. They're not declaring war on the dollar. They're planning for its decline. Meanwhile, U.S. influence is starting to show fatigue. IMF voting power challenged. Sanctions leverage diminishing. Military reach still strong, but stretched. Because when your credit is in question, so is your authority. Even allies are hedging. France and Germany are buying gold at record levels. Japan's moving toward a more independent monetary policy. Power is shifting, not through tanks or treaties, but through spreadsheets, bond yields, and lost confidence. The U.S. still holds the biggest gun in the room. But if the world starts questioning whether it can pay for ammo, that gun becomes a prop. And here's the twist. Debt isn't just a financial weight, it's a geopolitical weakness. One that rivals will exploit, allies will fear, and markets will punish. The U.S. isn't out of power, but it's burning credibility at a rate it may not afford for long. So where does this end? Does America climb out or collapse under the weight of its own promises? $36 trillion 0 cents isn't just a ledger entry. It's a symptom of a system addicted to spending and allergic to sacrifice. Right now, Washington is arguing over debt ceilings like it's theater. But the math is real. Interest payments are growing faster than tax revenue. And global trust shrinking faster than both. If this continues, the dollar may no longer be the world's anchor. Treasuries may no longer be risk-free. And America may no longer be the default superpower. The most dangerous part? This collapse won't come with sirens. It'll come quietly. Foreign buyers stop showing up. Bond auctions stumble. Markets twitch. Confidence breaks. And just like that, the world stops asking what America says and starts asking what it can survive without it. But it's not too late. Not yet. Real reform. Fiscal responsibility. Investment in production, not just consumption. That's the only off-ramp. But it requires something America hasn't shown in years. Political will, because this isn't just a crisis of money. It's a crisis of leadership. of truth, of courage. So here's the final question. Will the US lead the world through this storm, or become the storm that shatters the world it built?